Space. Hey everybody, I'm live with Kostadin. He has a channel doing valuation like me, and you just started less than a year ago, right? On your channel?
Yes, that's correct. Thank you for having me, Scott. Glad to be here.
Yeah. Do you want to just tell us a little about yourself or anything you want before we get started?
Yeah, sure. Well, the first question was about my channel that you mentioned, and I guess it came up on my channel as well. Why I started it, and to be honest, there are plenty of content creators out there that are in this space, and what I personally disliked was the catchy titles that, and the whole video actually had a narrative that made you feel that you have to buy a certain stock or sell it. And I try to be different by creating these videos that are pure valuation. But I hope that the viewers, after watching my videos, have the feeling that they know the company better. So not to have an opinion about it based on what I say, but to be able to get an opinion based on their assumptions about the future. So my background is in finance, and that really helps. My previous jobs are all accounting wise related, so having done that definitely helps to understand the financial statements and to make sense of the information.
Right. So you got your undergrad in finance?
Yeah,
Is that
accounting and audit. Accounting and
accounting and
audit.
audit? And that's what you do? You work in accounting?
My first job was at PricewaterhouseCoopers in the accounting and reporting department. So I got a lot of information about the industry from there. Of course, managed to apply a lot of what I learned. And now I'm in a position that's more into the reporting part. So not that much into the data entry, but really analyzing the data and making sense that um, just it looks good and it represents the reality. So more into
Okay.
the reporting and controlling, I would say.
What type of company do you work at now? Is it like a bank, a financial institution?
No, no, it's a company that's mainly in the nutrition field.
Okay.
So it's the one that produces a lot of products. But I mean, the finance as a as an area as a department is has a lot of similarities around. Except of course, banking is completely different field, but it definitely helps me a lot. Also in this channel to really follow what's happening in the different companies and to make sense. And you know how it is, every company is different, and you really need to understand the fundamentals before you forecast anything about the future.
Yeah, I mean, finance is part of every company, so it doesn't matter if it's a financial institution or a grocery store. I mean, finance is
Yeah.
there's going to be. I mean, it might not be an entire department of people, depending on how big the company is. It
Yeah.
could be just one person doing a financial part, or it could be a large team. Um, See, guys, so that's the benefit of knowing this stuff. You could work at most companies if you have a good understanding of uh, the finances. And um, so, what's the last video you did evaluation on?
The last one I think was Chipotle. I was asked by. Normally, what I do is at the beginning when I started, I had quite an extensive list of companies that I wanted to value. But over time, through the comments, I get a lot of suggestions, and I always prioritize the suggestions that I get from the subscribers. So Chipotle
Right.
came as a suggestion, so I did a valuation on that. Definitely an interesting company to take a look at and to see how it develops over time. But forecasting the future is very challenging for a startup company, for a growing company, and compared to one that's more mature. So there's a lot of uncertainty there.
It's
And especially if you think about Chipotle, I mean, if they want to expand, they need a lot of new locations, and that's not free. It comes with a cost. There's a lot of uncertainty. Are they going to be successful? Is it going to be in the US or internationally? Internationally, there's a different kind of risk. So definitely interesting. But we had a short chat before this live stream started, and we have valued a few companies, the both of us, and oftentimes we get to a similar outcome, with the exception of Zillow, and it's definitely one that we can briefly discuss. By the way, I don't see the chat at the moment, so if there's anything coming from there, please share it.
You can't see the chat at all?
No, I can also open the I don't want to have an echo or something, but it should be fine.
Okay. Nothing really came up. Just
Okay.
saying hello.
All right.
Yeah, Chipotle's a good company. I don't think I've done that one yet. It certainly has grown a lot the past few years, especially since 2017.
Yeah, it had a huge spike.
Hey, Marcos. But it is capital intensive when you invest in a and Chipotle is a private company. I mean, it's not a franchise, right?
No.
It's like Starbucks. It owns all its locations. Okay.
It owns all the locations.
He's from the Netherlands. Somebody asked where you're from.
Yeah, I live in the Netherlands. I'm originally from Macedonia, so if somebody's curious about that, but I'm here for almost 4 years now in the Netherlands.
Okay. Macedonia. Okay. Because your accent didn't sound like Netherlands. I was thinking more towards Russia, that kind of area. I thought your accent was from. Was it Macedonia? Wait, Netherlands is Western Europe, right?
Yeah, it can be considered this in part of Western Europe, kind of north part before the.
And Macedonia is Eastern Europe, right?
Yeah, it's southeast. I would say it's on the Balkans, so it's close to Greece. It's close to Croatia.
Okay,
It's
yeah.
maybe one of the most popular destinations around. So
Alexander the Great is from.
Sorry?
Now, somebody said in the comments, Alexander the Great is from Macedonia.
Yeah, one of the hot topics in the region due to its history. I mean, history is always one of the topics that countries fight over. So, but you're absolutely right. Whoever mentioned that, he's indeed born in that region called Macedonia in the past. By the way, what are your thoughts on Zillow? Because we started that discussion, and I have my opinion on it, but you can share your view, and we can move into more market-related questions, and of course, answer what the viewers ask.
Zillow. So when Zillow was trading at, I think 80, I had a target of 40. Was it 40 or 60? Maybe it was 60.
I think at around 40.
Yeah, 40, and now it's 50. So I'm not. I mean, I'm bearish Zillow because I think it was a mistake to go into the real estate flipping business. And we all make mistakes. All companies do. Lots of big companies do. And the stock did crash after that. I think what they were doing before is kind of like selling ad space because they have a lot of people visiting their site, more people than anybody in that industry. Yep. So if you feel the level they were trading at before they got into home flipping, I think they got into home flipping maybe in 2018, 19. They started again. This is where they belong. And then they started flipping businesses, and the stock went up a lot because they were bringing in like so much more revenue, but they weren't making any money. So I think the stock will come back down to this range, 30, 40, because I think that's where it belongs. Because I think it was trading appropriately before the home flipping business. So it'll come back down to that level. And I think if they stick to that business model, that works because it's very low cost to sell ad space. It's very minimal. Flipping, buying real estate or buying any asset is very capital intensive. So I just don't see it being a huge gainer. I think I could see it just coming back down to this level and trading sideways for a long time. But you see it as you're bullish. It sounds on Zillow, right?
Well, for the first part, I fully agree with you. The decision to go into this new industry was definitely a mistake in hindsight. If you take a look at the results, the fact that they had losses on this segment, of course, they should not have done that. But if I put myself in the shoes of the CEO of Zillow, and I have all of this data available in the US about the pricing of the houses, the apartment in the different regions, the size of each apartment, I can make comparison. It sounds that data can be leveraged to make good decisions to buy certain apartment or house at a lower price, right? So just there should be, in theory, it should work, right? At least on a lower scale. What I think they made a mistake was to go big without making sure that they can deliver those results. So the house flipping business is capital intensive, so they had to borrow money for that. And the second part of the business, the IMT, the marketing part, is definitely one that it's a great business model. It's what they made them money historically, and they still have that. So the house flipping, they started, they went big, they noticed that, okay, we're not really making money of it for whatever reason. Maybe they were making poor choices based on the data. Maybe they overestimated their capabilities. And now what they're left with is basically the business is actually worth, right? So what you're saying is it was worth around 40 or 50, or let's say 30 or 40, 2-3 years ago. But that same business grew year over year, and it keeps growing. So the core business is still there. And that's one that you mentioned that you like. The question is, how fast can they grow? And the homes that they still have on the balance sheet, are they going to lose money off it, and how much? So in my forecast, normally I reduce the value. Basically, I'm expecting that they load the homes off to the market, but at a lower price. So even if they make a loss, it seems that they should be trading at around $60 a share. So at the moment, it's not really that $60 to $70 a share. So a little bit bullish, but mainly because they have the business model that has proven over time that it works, and that's what they currently have.
Right. It's and a lot of this decrease in stock price is just the negative sentiment, because people, once they said they were exiting the home flip, then people lost faith in the company, and so sometimes the stock goes down a lot more than it should, just on like investor sentiment, and that's when it may be a good time to pick it up. Or the opposite could be true when people are just buying the stock for no reason. That may be a time to avoid it, unless you buy it and sell it before it drops.
It's difficult to flip houses on a large scale. You're exposing yourself to a huge risk to the real estate prices. So if there's a huge decline, it's too late. You can't offload huge number of houses on a short notice. So they took in my opinion, unnecessary risk of an idea that in theory sounds good, but in reality it's difficult to implement it, especially not on a large scale.
Right.
I mean, in the last, since the corona started, there has been a lot of volatility on the market, and rightfully so. There was a lot of uncertainty, but it's clear that a lot of companies had an overreaction in their share price in both directions. That's why we saw a reversal not that long after that.
Yeah, that seems to be the market recently. Everything shot up right after COVID, and now everything's coming back down to pre-COVID levels.
Have you done any short selling, or what are your thoughts on that? I mean, when you notice that the market is at a point that is unreasonably high, or not the market maybe, but individual companies.
I haven't really did. I used to play options a lot more. So I haven't done short selling in a while. Sometimes maybe I'm starting to think that maybe I should, because there's sometimes I see stocks that are really overvalued, but I just get concerned that because you have to time it right. That's the problem with short selling. You can't just like buy it like a stock, and then if you're wrong, you can just wait a year and then it comes back. With short selling, you kind of have to time it right, because if you're wrong for a year or two, you can lose a lot of money. But yeah, I don't really do any short selling. If I did, it would probably be to either sell calls or buy puts. I probably wouldn't buy stock short.
Yeah. No, I share the same opinion. And I open the comments and I see a quote that the market can stay irrational longer than you can remain solvent. That's definitely, and that's actually one of the reasons why I don't short sell as well. Honestly, it makes me uncomfortable. I only did it for one company during the pandemic, and that was Zoom. Like a huge. I think it went up to like 300 or so, but that was incredibly high. Now then it went to like 600. So I managed to get it a little bit on the way down, but every time that I have a short position, and I just did it once, but before that I tried to do it in a virtual, before I started actually with real money, it just makes me feel uncomfortable.
Yeah.
And I think it's also that some as an investor or as a trader, you need to figure out what makes you feel comfortable. And if something doesn't make you feel comfortable, then it's just not for you. Doesn't matter how many people make money off it, just don't do it.
Yeah, I prefer to just buy and not worry and not have to keep checking it. And when you do like short selling, or when you invest in like riskier stocks, you kind of have to stay on top of it a little more than if you invest in like a Microsoft, where it doesn't matter if it goes down, because over time it should go up.
It doesn't matter what people tweet.
Yeah, even though it's hard, because sometimes even I get like people comment saying something about a stock, how this and that, and it gets in my head too, because I'm like, I was so confident about something that I see that, but I try to. I don't totally ignore it, but I kind of ignore it. Maybe I'll try to learn about what the person said. But people do say things that are, like Matthew said, facts. They say things that they want to make their story sound better, and so they kind of maybe not make up things, but embellish, or which makes sense, because when you don't understand things that well, you have to kind of embellish or make things up, because you don't really understand what you're talking about, and that's fine if you don't understand, but that's why just listen to me then. At least with the financials, I at least that's why it's easy for me to explain it, because I really understand it, and when you don't understand it, you could tell that they don't know what they're talking about. Well, listen to Costa, people who understand what they're talking about.
Yeah, I mean, when it comes to valuation and to having a target price, to be honest, what I try to do is explain the business and what it does, and then let the viewers think about the future and what they can expect from the company. So I can give some light on the limits, how far it can grow or how slow it can grow. But what will happen eventually, nobody knows. And I don't think any content creator should push their opinion that this is a buy or this is a sell. Like, it can be a buy or sell based on the assumptions that me or you chose, but we could be
Right.
wrong. And
That's
we have
why.
to emphasize that there is some value in the content, but there's no guarantee that things will play out. So um, do your own due diligence. And for example, for Chipotle, I'm in the Netherlands. There is no Chipotle in here. I
Right.
did reach out to a few friends to understand what they think about, the products. But that was the only thing that I could do. Like, if it's McDonald's, I can go and take a look at the product and have a real life due diligence to go and check the products. Sometimes that's not possible. And I mean, if you take a look at Amazon, sure, you can order something off Amazon and you have an idea of what the company does. But Amazon is not just the online part. There's so much more now. You can't know everything, so you rely on the information that you see online, the annual reports, and that's just a fraction of what you understand about the company, and it's historical. So what's ahead of us, we need to make some assumptions. And I mean, the fact is that nobody is going to be 100% accurate. The goal is to be less wrong than the market. And I think
Right.
if we take a look at the for example, investing as a process, you have to have certain beliefs. You have to have basically first a belief that the market make mistakes and certain assets are overpriced or underpriced, right? And then the second belief that you have to have is that eventually they correct themselves. So there are two assumptions on the market and on general that you need to have before you. Otherwise, what's the point in doing valuation, right? If everything is perfectly priced.
Right. And that's, and it's always going to be, there's always so much opinion baked into the numbers, but that's pretty much what we do. Our channels do is we're not trying to predict the future. We're just trying to find a stock that may be overvalued or undervalued, based on what information we have. Of course, stuff can change in the future, but that's why it's almost impossible. When people ask me about, penny stocks or pre-revenue stocks, I mean, I could give my opinion, but there's no, like, it's just kind of like a rolling the dice kind of thing. Like, I mean, you don't really have any information to work with. But when you have a company that has history, like Zillow, you can look at their financials and kind of extrapolate that into the future. Then maybe see, look in 2020, it went from 3 billion to 8 billion. That's why the stock, it looked great. Like, because you don't look at profits, you look at revenue. When they're losing money, you can't look at profits because there's nothing to look at. So you look at revenue and you're like, this is the best. This is the best idea for them to get in the home flipping business.
No, of course, looking at only the top line, it just doesn't add value. But this is what surprised me, because I looked at the first quarterly report when they reported the sales of homes, and I noticed that they're losing money on that division. But I thought, all right, maybe there are some improvements to come. Maybe they have to find a bit of better algorithms. Maybe they're going to optimize the process or automate some stuff. So eventually the margin will get better and better, and they'll start making money. And then came the second quarter, and I just saw it being about the same. So they're still losing money. And then the third quarter after that. And then I said, okay, this makes no sense. I mean, I can't forecast. If I take a look at this business and I try to value it, I'll have a negative value because it's just destroying value over time. So that was my initial thought. And then I saw the share price, and it went from, I think it was around 80 when I valued it, and it went, let me see, the top was almost $200 a share. And based on my valuation was around 60, assuming that they're going to get rid of this whole division that makes no sense.
Mm-hmm.
So, for example, if you take a look at the 200, right? At the 200 level, they had the business that the market was pricing it at around 40, 50, plus a money-losing division that is destroying value. So that price made no sense. Right? There is no way to justify it unless they had a huge change in the profitability of the homes segment division, which, yeah, I couldn't see how they would do it. And again, it's worth mentioning that this additional risk that they have from owning homes, if there's a slight decline in the real estate prices, they're going to lose millions. So it's just an unnecessary risk. But yeah, in theory, there can be a story around it that it's a great choice because they have the data, but in reality, as we saw, it was not the best one. Maybe they should have started with less homes. If you start with, I don't know, like 100 or 200, and then work your way up if it's profitable. Not go big and go all in so quick without, maybe overestimated their ability.
Yeah, it's just like companies don't. It's just all about scale. Like I think, yeah, it would probably make sense to start at a small level, but most companies can't do that. But I'm sure in some scenario they would have been successful with the home flipping business. But that scenario happens maybe in 100-year times. You need like 3 straight solid years, or maybe 5 straight solid years of home growth or real estate increasing. So, but the problem is if they have a hard time raising capital, or real estate values go down, or there's a squeeze on supplies for the homes. So if any of those things happen, which they did, I think they mentioned that, I don't know if that's accurate, but it was difficult for them to source products to fix the homes up, and then
that's pretty much admitting that they made a poor decision, right?
But who knows what's the real reason? I always question, like, I'm sure that didn't help, but they might have lost almost whatever happened. They would have eventually lost in that situation, unless everything went perfectly, which it never does.
Oh, definitely. So it's just an unnecessary risk in hindsight. But what are your thoughts on, because you mentioned penny stocks, for example, if we take a look at cryptocurrencies, that's a topic that's been around for now over a decade. Bitcoin and Ethereum being the most popular one, but seeing Dogecoin and a lot of others coming up, and now there are thousands of them.
Yeah, there's so many. Bitcoin's coming down. It went down like 10% the past week, but it's back under 40. So everybody get into Bitcoin if you're bullish. Yeah, I used to be I didn't get it. I didn't think it would last. But maybe the past couple of years I kind of changed my tune, and I do think Bitcoin may be a good investment, and some other cryptocurrencies, and I'm definitely Bitcoin. But the fact that there must be like over 10,000 cryptocurrencies. I think once I looked, it was like 8,000. So
yeah,
so it can't last. I don't think it could. I mean, you could have 10,000 businesses. Like, it's possible. Like, people open businesses and they could all function. So can 10,000 currencies all function on their own? I don't know. I don't think so. That's what most people think, is that it's going to get watered down to like maybe a dozen or a smaller number of cryptocurrencies like Bitcoin. But I don't know. It just doesn't.
I see a question from Matthew. Who thinks the markets hit new lows this week? I mean, if your question is about the market and the share price movement in the coming period, in the short run, all I can say is that it will fluctuate. And that's all I can share, because I mean, who knows what will happen in the next week? I mean, if anybody tells you that he or she knows, that person is lying. You can't predict the short-term movement.
What do you mean new lows? Like, you mean new lows for the past year?
New low just as a decrease in price. Well, it did decrease. I guess it's just meant since the last decline, since the last correction that we had. Yeah,
it's down a little bit. Like, it's like down 10% from the peak.
Yep. Yeah.
But we all know some stocks are getting killed, like Facebook, Netflix. They're just down like 30, 40, 50%. Some stocks that are very healthy companies. So
yeah,
would you invest in Russian companies like Gazprom? I would invest in Gazprom if I could, but it probably would be silly, but it's definitely not going to go bankrupt. I don't think, but I guess they can. I don't know how the war in Russia is going to affect the stock market in these companies. Would you invest in Gazprom at $1?
I don't think I'll invest based on the risk that it has, because if you think about it, it's not investing there. The way I look at investing is, you have predictable cash flows, or cash flows that you can predict to some extent, discount them back, have a value, and there's not a lot of risk. Russia at the moment has a lot of risk, and it can go in so many different directions. They could even they could just have a new law that forbids you to get the money out, or sell the shares, or whatever that may be. So in my opinion, that's also an unnecessary risk that I can take, but I don't think I will. Of course, the value of the companies is not currently reflected in the price. They're undervalued. But then the question is, how are they going to perform in the coming period? Are there going to be more sanctions? Because one thing is clear, there it's not going to go back to normal that quick. Even if the war stops, there will be plenty of sanctions for the period to come. As for the cryptocurrencies, by the way,
yeah, what do you think about that?
In my opinion, first of all, I'm all in for new things and new innovations that add value, and Bitcoin definitely solves some of the problems, not as many as maybe it's currently priced at. I don't think that it deserves the market cap based on the use cases. So I don't think it's worth that much based on the. But on the other side, you can't value it. You can just price it. It's same as asking yourself how much is the gold worth, or not that Bitcoin is similar to gold. In fact, if we take a look at the correlation, one of the arguments for Bitcoin was that it's store of value. Based on the last probably decade, I don't think it's a store of value. When the share prices of the large companies went down, of the indexes went down, the Bitcoin went down even more. So it's highly correlated, and even overreacts to these movements.
Yeah, it's
So I don't think that the term investing should be used when it comes to cryptocurrencies. It should be used maybe trading, maybe speculating, but you can't, like, if I ask you how much is Bitcoin worth, what is the value? You can't estimate it. There are no cash flows. It's a currency. It's being used as one, right? It's the same as if I ask you how much is the euro worth, or the US dollar, right? It's just a pairing to another currency. You can't estimate the value. There's no methodology that you can use for that purpose.
Exactly. There's no intrinsic value in any currency or or an asset that doesn't produce cash flows. It's only worth as much as the next person is willing to pay. So
Exactly.
I could find a stick on the ground, and if someone's willing to pay me $20, then that stick is worth $20, at least that person.
Yeah.
Even though everybody else in the world wouldn't pay anything for that stick. So if you can create some value around something,
Sure.
and they have with cryptocurrency.
Maybe on the previous topic, because there was a topic around Russia. I'm not familiar with Kiwi, as I see you've opened it on the screen. I'm not familiar with the company, but I have to say that if there's a company that I'm familiar with, that would be Yandex. It's the same kind of a similar company, search engine, just as Google in most of the world, and Baidu. So Yandex might be one that's interesting from. If the question is it going to be around for a while, then the answer to that one would be yes. And it's not going to be impacted as much because it's mainly used by people in that region. So it's not really used in the US as much as it is in Russia. So maybe it's one that's definitely worth taking a look at, assuming that there are no sanctions on foreigners buying and selling Russian companies, which is a risk that's there.
They're based in Netherlands, Yandex.
Yeah, you're looking at that part, but come on,
if that's just a corp. It's
take a look at the operations. It's
right. It's because companies can incorporate in, like, some companies incorporate in the Cayman Islands, so they get a shield of they don't pay as much in taxes. So they just probably incorporated there for tax reasons, but it is a Russian company. Yandex.
Oh, thanks, Savvy Money Show. Thank you for sharing some additional information on QE. I mean, if it's kind of a PayPal and it's used mainly for transactions within Russia, then it's good. But if it's used for international ones, then I would probably kind of be more conservative in the international part.
Yeah, I haven't heard of that before.
It's yeah. No, me neither.
Russian company that provides payment and financial services in Russia and other countries. I feel so bad for well, I mean, obviously people are dying, but I mean, that's terrible. But since we're focused on the stock market, I feel bad people who had their life savings in the market, or maybe in the banks in Russia, and now they have nothing. That's got to be
true. Yeah. I really hope that there's an end to it soon, and that mainly the people will not be suffering for too long, because it's definitely a terrible event.
Right.
But by the way, one of the companies that if I ever am invited to a university to speak about any of these topics, I will show this company. And I think you've also done evaluation on it. It's Nano Dimension. It's one that makes no sense from a rational point of view. I don't know if you've checked the company recently, but the market cap is, you see, 800 million, right? So it's under $1 billion. And if you take a look at the balance sheet, take a look at the cash it has.
Yeah, it's trading close to cash.
I think that I don't think this is the correct one, because now you have the 2020 figures in there. It's not the 2021.
Yeah, let me do quarterly. It only goes up to 930, but they have even more. They're trading below cash value.
1.4 million almost in cash, and they're trading at 800. And you probably think, well, they have probably debt, but they don't have almost no debt. If you go below to the liabilities, they have like 20 million, all of the liabilities, right?
3.6.
No, if you take a look, it's just the equity part. It's basically the investors.
Yeah, 29 million of all liabilities. So they're, and this is, yeah, it's not too common to see a company trade below cash value. So you'd have to look at their run rate to see how much cash they go through a quarter, and it could be worth it.
The reason behind this, from a rational point of view, it makes no sense, right? I mean, I would, if I had the money, I would buy it for 800 million and get the 1.4 million in cash
and liquidate it. Yeah.
Of course, nobody will sell it on the other side, but the reason why trading so low is there is no trust in the management, because the whole purpose of this company is, and I'll try to explain it simply, they're trying to manufacture 3D printers, right? So they have this idea that if a manufacturing company wants to launch a new product, right, the first thing that they do is they do the R&D, they come up with a certain solution, they send those specifications somewhere abroad to make a prototype, and then they wait for the prototype to come, and that might take weeks. And then once they have the prototype, well, they might not be happy with it, and they might ask for some changes. So the time to market might take months before, of course, they have the final product, and then it goes into mass production. So what they're trying to do is they're selling a 3D printer that can be used in-house. So you don't have to send the specifications somewhere for a prototype. You can just test it in-house, and instead of waiting a month, you can have the results in a day. That is the selling point. Of course, they don't have all of everything yet. So they raise money, a lot of money, to to acquire basically companies that can add value in this process. The problem is that the market doesn't trust the management that they can put this money in good use and make good acquisitions. I mean, that's it. At the end, it comes all to that. And I think they spent like 60, 70 million, which is not a lot compared to the cash that they have historically to come up with new products. But I think it's not that often that you see a company with no debt, just cash, and trading so low. There's nothing that
common.
They do.
Right.
Look at their share-based payment, but there is nothing really. There is nothing.
So yeah, you can raise money from multiple sources. You can, sell your company, which is selling stock. You can take on, well, they didn't take on debt, but generally companies that are losing money don't have that much debt. And if they start taking on debt, then it's the end of the road for them. That's kind of like the last resort. But yeah, so you just raise all this equity, but you need to like make a profit at some point, because if you're just burning through cash, it's not an investable business. Unless you could somehow take over the entire business and liquidate it. But usually that's what Kosta said, but there's usually things in place where you can't do that.
I guess from a company life cycle point of view, it's still at a very early stage, but even at this stage, there's not a lot of trust in the management. I mean,
well, obviously, if you're trading below cash, there's a reason it's trading below cash. Like there's no way, and there's no way like a company like a healthy company would have more cash than it's worth, unless we were in like a real depression, or like the market just tanked. But they don't even feel they can even make a penny at this point, because even if they made a penny in profit, that would keep them above water. But at this point, the investing community is saying, you will lose money. So we're not going to even invest in you because the cash you have, you're going to burn through it, and it's going to fall below. So,
Yeah,
but
the
if they're
intention is
successful, you can make a lot of money.
it really all depends on the acquisitions that they're going to make, because that's the reason why they raise the funds. It's not just to support their operations, the R&D, the the SG&A. It's more to find buy a good company, probably a private one, with these funds that they can integrate. But I mean, it's been a while and they don't have announced a large acquisition yet. So if you have 1.4 million on the balance sheet this year, and then you have 1.3 and a half next year, and then you have 1.2 the year after, and you're, I mean, there will be a lot of pressure on them to really use the funds.
Yeah. I bet you they make lots of acquisitions. Probably nothing significant.
If you take a look at the cash, they still have. I mean, look at the revenues, huh? The one that you just pointed out. The revenues for fourth quarter and full year. Did you see that?
They don't have much.
It's nothing. It's like a few million.
5 million.
5 million. So
announced its first 2 sales of Dragonfly.
Yeah,
and when you watch other YouTube channels, and if they're, whether they're bullish on this company or they want to get a lot of views, they'll really highlight things like this. This company made its first sales. Now they might have a contract with the government for more sales. They really highlight these things, and there's nothing wrong with that. But just know that it's not that significant.
True. If you take a look at the share price, you'll get a lot of you'll get a better picture of the company and how the market feels about it. In the last, let's say, that's even.
They must have did a reverse stock split.
No, it's not. It's just that they raised a lot of funds at a very high valuation. There was a big story behind the product, and that's it. So they just had a good story behind the why they're raising funds.
Yeah, they did October 2000.
Yeah, that's before. That's before the period that you showed. Because that's 2019, huh? The chart that was before.
1 for 10. Now I'm just saying because it couldn't have started out this high. That's impossible.
Not that part. No, not that part. Yeah. But they raised funds in 19 and 20 again, or 20 and 21 also maybe. So they raised a couple of funds at higher valuation, even though they had nothing to show for. Just because they had a good story that this is something that a lot of manufacturing companies can use to fasten the product and the time to market, which apparently there is not a lot of demand for it. So I don't know what they're going to do with the funds and what kind of acquisitions could help. Yeah, I mean, it's definitely an interesting case. So let's see how it goes. By the way, you're publishing almost every day a video. Maybe after this, I'd like to know what is normally your process of, analyzing companies and how much time it takes you, maybe the editing part. More like, if you have tomorrow as a whole day free available to make a video, what would your process be, or how would your day look like? Starting from the morning, or I don't know when you make the videos.
That's a good question. Talk for like 3 minutes. I just got to use the bathroom real quick. I'll be right back.
All right, no problem. Think about the question. Yeah, I'm sorry. I don't have access to the screen that Scott is sharing, so I can't really share anything. But I can discuss pretty much anything that comes as a question. Yeah, I see that. Yeah, I mean the market prices. It's not something that we should take for granted, and there are oftentimes reason for the declines. And I think the last movements, if we take a look, especially in the large companies, Netflix being one that had a significant decline, PayPal, a lot of them went down, but there was a reason for that. I honestly, in my opinion, they should not have been that high in the first place. There was no fundamental reason for them to be that high. Yeah, this new event around Ukraine and Russia, uh, definitely terrible, and I'm sure it will have impact on the global economy. And of course, the Udar, just to mention, yeah, I saw your comment on the dollarization of the world economy. It will have definitely an impact on the dollar. Um, BZUN, I'm not sure that I've analyzed any of them, to be honest, Mike.
Momo. Yeah, I haven't. I was big into Momo. I got out of it. I'm glad I did. I got into it in the 20s, and I sold out like around 13. So, what were we saying?
I do have some knowledge around Square, but I have not. I don't have all the information to give an opinion on whether it's undervalued. But the price where it was before, I think it was at probably around almost 300 per share. That was definitely too high. Now it's around 106. It's much closer to reality. Um, that's the one that's run by Jack Dorsey, right? The previous CEO of Twitter. So I think management wise, they have a big name behind it. I have not driven enough into the not the financials, but more into the prospects. What are they expected to do in the, let's say, in the next couple of years? I know there's a lot of discussions always around Square though, so maybe I should take the time and look into that.
Here's a quick way to identify, and of course this is not a guarantee, but look at the price in March where it was trading. We'll do this is an example. It was 50, low 50s, and now it's obviously it went up 5x. So people think 100's a great deal from that, but we know it's everything got inflated, and it shouldn't have been. Almost all the stocks that got pushed up 100, 200% shouldn't have been there, and it came down. So if it's trading above its pre-COVID levels, it's still trading double its pre-COVID levels.
I'm not sure if I would fully agree with that, by the way, because I don't know what's the revenue growth and if there's some significant change. If they were growing at, let's say, 30% and then they went to 50 or 60% during the coronavirus. So it could be that if 50 was the fair value before, it's close to 100 now.
Right. But
the 300 definitely it seems too high on first glance.
I was gonna let me just finish the thought. That's exactly what I was getting to. Is so now you have those 2 point in times. So look at the numbers in like 2017, 18, 19, and compare it to now. Does it seem like it's growing at a steady pace? If it's growing at a similar pace as it did in the past, say 5, 10%, I don't know. Maybe 50 was appropriate. Maybe that it's going to be back at that $50 level at some point. But if you're seeing a great growth since COVID, and it does deserve to even be 200 again, then maybe buy it. Maybe it's undervalued. So just you have kind of 2 points in time. So try to identify the financials from 17 and 19, and from 19 to 21 or 22, and see, was it that big of a spike? If it was a big spike, then it may be undervalued. Or if it wasn't a big spike, if it's been trading at similar revenue numbers, a little growth, it's probably overvalued still.
That technique that Scott's mentioning. For the viewers, that technique that Scott's mentioning is more like a relative pricing. If the company, assuming that it was fairly priced, if it's worth that much with these financials, is it fair to be priced at this point with the change from the couple of years?
But but I could go into like a million. It was it wasn't priced appropriately here. So if you don't feel that, then I'm just trying to give you 2 points in time and to simplify it. But right, if you really dig in, and it would be hard to do that, but and identify this was not appropriate level. But if you assume this is appropriate, since it was like that for a few years, then why is it double from there? Is there a reason?
Yeah,
you have to make that assumption it's appropriate here, because if you don't, then there's nothing to kind of base this analysis off of. Do you agree, or is that too
I'm not that familiar with the prospect, so it's difficult for me to judge. I mean, I fully agree with the approach when it comes to relative pricing. So again, you have to make the assumption that pre the pandemic it was fairly priced. But if that's not the case, then of course the whole process is a bit flawed. But
yeah,
and that would work. The question is, of course, what has changed in the meantime, and we can't get all of the information from the share price chart. So from saving money,
exactly,
he was comparing Square and PayPal that had a huge spike like Zoom. Yeah, I fully agree that they had impacted. They were positively impacted by the pandemic, but it's just too much. And in cases like this, it's clear that the crowd moves to a certain direction. Everybody is working from home, so Zoom has to benefit from it. Let's put the money there, regardless of how much it's actually worth. And yeah, what happens is pandemic is here now for a couple of years, but hopefully it will be the last year that we're impacted by it. But Zoom didn't benefit that much, maybe not as much as expected, but also the new users, the question is, are they going to be around when the pandemic is over, or are they going to revert to where they were before? So we have a shift in the economy and the demand for the product, but it could be just a temporary shift. It's completely different than other products that are recurring regardless of the economy. So Zoom is definitely one that's dependent on it.
Right. Yeah, Marcos brings up a good point. I still need to answer your question from earlier, but so it would imply, based on at least revenue, that if it was valued appropriately in 18 and 19. Now it should be really undervalued, and a $200 stock price. I'm just saying, based on revenue, it seems like the $200 stock price, it should get back up there. But you can't just base it off of revenue, of course. So we'd want to look at cash flow, and again, cash flow seems to be improving a lot. In 2021, but you'd have to dig into these numbers a little bit. But this will be a fun thing to talk about, because it kind of, I think, because you need to at least get starting points, because some of the stuff we do on our channel is just so detailed, and it's hard for people to like even know where to start. So, but you were saying earlier.
I mean, if only on this slide, it's difficult to judge, because if you take a look from cash point of view, they made let's round it 2021 to $1 billion in operating cash flow, right? 847 million, but they invested a lot. So my question would be, okay, so they made $1 billion, and what did they invest in for over $1 billion? What can we expect from those investments in the future? Because there are certain investments that would help them to grow revenue. There are certain investments that would reduce costs and margins, so that maybe with more revenue in the future, they'll have higher margins. I can't make an opinion based on just looking at the financials. Even though there's some information, I really need to understand the products behind it, and don't want to misinform the viewers on this one.
Yeah, I mean, there's obviously a lot to consider, but these are the kind of ways to get started, or to at least think about it.
But back to my question. So assuming if you had a full day tomorrow to record a video, where would you start? So would you start with, first of all, assuming that you have a company in mind? Let's say that you had one from your subscribers. They suggested that you
I'll just show you what I'm doing today. So So usually, when I get up in the morning, sometimes it takes me a while to get started. Sometimes, it depends. If I have something to do, like I have an appointment, I have to go somewhere. I'm more motivated to get the video done early. But if I have the whole day to do a video, it could take me a few hours to get started because I know I have the whole day. And that's what happened today. So for the first 2-3 hours, I was just messing around, not really doing much. Then when I finally got started with Valet, well, my first step is to look at the what's in the queue and then see what company reported their 1231 numbers already. So I just keep going through the list until I find a company that reported 1231, and then I do a video on them. Okay. And it takes me about maybe an hour to get the Excel spreadsheet set up. Just putting in all the variables and putting in all the pictures of that I show in the video, all the screenshots. And if it's a simple company, it could be an hour. But if it's a little more complex, because the model is pretty standardized, but it doesn't work for a lot of companies, especially companies that lose money. So I do have to do a little more digging and try to understand it a little better.
Okay.
What's that?
So it takes an hour to get the spreadsheet done. Let's say you get the spreadsheet done, then your next part is to kind of record the video, right? And then you do it, in different parts.
And I'll speed this up. So once the Excel file is set up, then I could start recording. And I usually do it in half-hour blocks. So it generally takes about like an hour of recording. So I do 2 half-hour videos, and I kind of put them together. And I just go through. Everybody knows I have the same process every video. I start with the opening. I talk about the company, then I go through the financials. So I go through my video and record the whole thing, and then edit it down to usually like 18 minutes. That's about an average. Okay. And it takes about the recording takes about an hour. The editing takes another 2 to 2.5 hours. Okay,
so 2.5. So you get like 4 or 5 hours into work to get a video done, then, right?
Yeah, but it never goes that smooth because of like I get hungry, I have to go to the bathroom, or I end up a lot of times I'm shooting a video and I have to try to look like I don't really understand something on their financials that well, so I have to I don't stop the video usually, but I'll go to the 10K and just look up the term or Google it or try to understand it better.
Yeah. Do you read certain articles or maybe watch other videos on the same company just before that, maybe?
I used to watch videos. I don't really anymore, unless I feel like I need a little more info. But most of it, I'd say 90% of it is from their report, the quarterly or annual report. I get all the info from, but yeah, there could be some things that I just can't understand that well, or I don't really get much info from here. So I'll try to Google it or watch videos if I can't. But yeah, I guess if I could, I guess about 5-6 hours it takes to get it done.
That's fair.
And I've been doing live streams now every day during the week. because I do have I could if I get up, I usually get up at 7. If I start the video right away, like if I do have something to do later in the day, I could get it done all but done by noon. The video,
Yeah.
but it's really hard to make 2 videos in a day.
Yeah, I
It's like
think also focusing on quantities is not the most optimal way. It's qualities definitely should overcome for
yeah,
quantity.
and it's draining. It's like running a marathon. Once I'm done with the video, I feel like it kind of like I ran a marathon, and I just don't have the energy even
Yeah,
to focus on. Live streams are great because I don't have to edit. That's why I love live streams. Because if I could
yeah.
just shoot it, yeah.
Oh, I get that. I get that. I have a bit
But
of a different process, but yeah, I
how
guess.
do you do it?
Well, the first thing that I do is I try to analyze the company without any bias from anyone else. So not looking into other articles or videos or anything. So just going through the annual reports and filling a template that is more customizable based on the company, based on of course the annual report. So that I think it's fair that it takes me more than an hour because then for example, if I go through the balance sheet and I notice something strange, like for example, if a company has other assets, a very common line, and it can be significant one. Then I go to the note to understand what it is. Is it
Yeah,
deferred taxes? Is it maybe some? It can be anything. So I'd say the financial part it takes me probably like 2 hours and to get the numbers into the spreadsheet. So it definitely takes me more. But then, yeah, reading the annual report, I check a few sections that are, in my opinion, very important, and I try to understand the business and then the next part is of course what about the forecast? What's ahead of the company for the future? What can we expect? What's reasonable? So when I have a good idea of the company, then and only then I look at different articles online, only to notice if I'm just to check if there's something significant that I'm missing. Is there maybe some lawsuit? Is there something that is significant that I just, maybe I've missed in the annual report. Maybe it was from the year before, 2 years before, or there was some cost for the decline or increase in revenue that's one time. So, but so far I have not adjusted any of my valuation based on an article. It has helped me to understand certain parts of a business better, but it didn't impact the value that I get. It's kind of the last part. And yeah, the only part that's different for me is that I don't record and then edit. I just do it in one go.
you
So
don't
what
edit your
takes me
videos.
more time is, yeah, I take it in one go, but I do prepare a presentation that uh, it has some flow to it. It's not a template, but I want to have a similar structure throughout the video. So if somebody that subscribed to my channel checks a new video, he already knows what to expect, what's covered in the first part, what's coming next, and there's a flow that at least for now it's working. But of course, if there's feedback on that from the subscribers, if they want to have something else, I'm definitely going to change it. So to me, it's probably the spreadsheet analyzing numbers as a first part, 2 hours. Then we have the annual report and some details, and then googling some stuff about the industry, then googling some company specific, and before the recording I have the presentation that really helps me to go through the numbers. So I it's a bit of a different approach, but I guess time wise I would say it's about 7-8 hours for sure per company.
Yeah.
But it's definitely draining, and I mean I have a full-time job, so normally I'm working for 8 to 9 hours per day, and when I'm done at 6 I take a break, um, take some
Yeah.
time
It's
off
hard.
work, have dinner with my wife, or cook something, or just relax for a bit, and then after that normally I spend some time on this. So it's normally in the evening that I'm working on this, but it's something that I enjoy, so really don't mind, and
Yeah. You gotta
thankful
enjoy it.
for the feedback that I get. Definitely a lot of support from the subscribers. And what I think is important to build in the long run is to have a community of people that can respectfully disagree. We have different opinions on Zillow, and that's okay. you know I, I should not be telling you that you're wrong, because I don't know, maybe you're not, and vice versa. So just having different assumptions about the future of a company, that's perfectly fine. That's healthy.
I I've been wrong a lot, but I still like sometimes I'm wrong, but I make money, and sometimes I'm right and I lose money. So it's not. That's a funny thing about the market. You don't have to be right or wrong. And not you don't. I mean, ideally, you want to be right more because you're going to make money. But there's so many times I messed up on a stock. I was like, I shouldn't have bought this, and I end up making a lot of money because I don't know. I just timed it right. And there's other times I did all this research and I did identify a great stock, but I timed it wrong. I mean, or I just might be wrong.
Sure, but in the long run, it's a learning process, right? So let's say you invest in a company, you do the research, and then something comes up, and you think back and you say, "Is this something that I could have known? Is this something that I could have figured out based on the financials, based on their updates?" So ultimately, you learn something, right? I think from the mistakes you learn more than from the successes. The successes, you're like, "Oh yeah, that's
a lot more.
perfect. I knew that." But from the mistakes, you learn more. And I don't know how many of the viewers at the moment, or when they watch this afterwards, are investing, but I would encourage them to, even if they don't have money, just start with a demo account with virtual money and see how good you are at this. Not in a week, but in a long horizon. And I know some people are quitting jobs to be day traders, and then they figure out, oh yeah, this was not as easy as I thought. Of course it's not. But just give it a try if you want to be into day trading with virtual money. There's nothing to lose. I mean, if you do that for a month, you have a good idea. If you want to invest in the long run and you don't have money, if you don't want to risk it, do it for a few years on a demo account, and keep track of the mistakes. What kind of a mistake did you make? What happened? You're bullish on Zoom.
Yeah, someone. I'm definitely bullish Zoom. I don't have extra cash, unfortunately, because it's all tied up into my stocks, so I'm losing money. But yeah, I'm definitely bullish Zoom. I just like what they do. I really, it helped me a lot because I sold my business recently, but because of Zoom, it kept me and a lot of my peers in business. So I'm probably a lifetime member, just because of that, and also they're profitable, and their revenue's up 10x since pre-COVID, and I do think it'll stay. I do. I think they have such a strong brand now. And I mean, I know from a different point of view, but there was a lot of I didn't even know Zoom. I mean, I kind of knew Zoom, but I didn't really ever use it much unless people invited me to one for a meeting. But there was other systems we used because Zoom is not secure. So you can't a doctor can't use Zoom, for instance, because of HIPAA. But my business didn't want to use Zoom because it's not secure. So we used a secure system, but none of them worked. So everybody just used Zoom. I'm
looking into the balance sheet, for example. And I mean, first of all, they have a market cap of over 30 billion. But if we take out the debt, because they don't have any debt, right? It's just the cash that we need to take out. We get closer to 26.5 billion. So that would be the market cap adjusted for cash. Closer to 26, and they're making operating about 1 billion, but they grew a lot, of course, in 2021. So it's a tough one. I mean, they're making a lot of money. The question is the revenue going to stay? So if the customers that they got in during the pandemic stays, and they manage to grow about 20% year over year, that would be great. But if they see a decline, because if you take a look at the revenue, right, you see 300 million, 600, 2.6, 4. That is a huge growth, but we know what's the cost behind it. So I
Right.
would be more interested in, okay, they got a lot of customers in this time. Are they here to stay? If the answer is yes, and they manage to grow healthy, could be fairly priced. If we see a like kind of a sideways movement on the revenue, so if they get, I don't know, 4.5 and then 4.7 and something like that in the coming period, yeah, then that would be definitely a worrying sign. So there is some uncertainty, but let's see. It did definitely drop a lot. Definitely dropped a lot.
Yeah, I mean, it's because if you did have the foresight to buy Zoom when COVID hit, you probably would be at a loss right now. You'd probably be down, unless you got it right. And no, COVID wasn't even that big. I mean, it was kind of big in March, but it wasn't that, like, we didn't know until it's deeper into 2020. So unless you caught it right at March, you'd still be down, actually. Unless you caught it January, I guess, February. But
yeah, I have not invested in Zoom as I mentioned earlier. This is the only company that I shorted on the way down a little bit. It was not there, but a bit further on. It's probably around 350 or so when I shorted it. But I was uncomfortable with the position, even though I did made like 20% in a very short term. I wasn't comfortable, so I closed the position. Because I know that the company is not worth, in my opinion, it wasn't worth that much. But what if it stays like that for 2 years? By then maybe it is worth, and I've just tied my money on somewhere that I'm not making money. In fact, I'm losing money, right, because of interest. So
right.
yeah, I know that short selling is not for me, so I'll definitely not do it. But it was just an interesting trade, in my opinion. That I learned something from it. Don't do it. Don't be uncomfortable.
Exactly.
I don't know. I think I have it on my list. I have a list of companies to cover in the coming period, and Zoom is one of them. I'm quite sure it's on the list. I need to take a look into Disney. That's one that I had requested a few times. So, and Florent
Disney,
Decor
yeah,
as well.
that's another good one. But when you look at PE, somebody mentioned Zoom PE 28. So try to build, because PE is kind of be important, I guess. But can match it against their revenue growth, and because if two companies both had a PE of 25, but one company had flat revenue growth, and this company against this company having a PE of 25 is much better than the other company who has flat revenue growth at 25.
I agree. And the second point would be what is on the balance sheet. If the company has PE ratio of 25, and if you take a look at Zoom, they have no debt and they have, what is it, over 5 billion in cash. So if you adjust the market cap for the cash, so let's assume that they take the cash, right, which is a substantial amount. See, 5.5 billion almost. So let's say that they took 5 billion, and they paid it out as dividend. The market cap should go down by about 5 billion. Then you get a much lower PE ratio. So the price always reflects not only the profitability, but also what's on the balance sheet. So yeah, if you have, I fully agree with you, Scott. If you have different revenue growth projections in the future, expansion in the margins, and also different balance sheets, then it's absolutely normal to have completely different PE ratios. But I never felt comfortable to judge only based on the PE ratio.
Right. That's like,
it can be an indicator, but only that is, yeah.
It's not a good. I don't even like the PE ratio. I'd rather. I like to look at price to sales and price to free cash flow. I'll look at PE, but it's too. It could really get twisted with accounting, so you really can't.
But the price to sale that you mentioned, that's probably useful if you're comparing companies in the same industry, right? Because it makes no sense across industries, right?
You always want to compare within the same industry or that same company over time. Yeah. I don't mention that, but I guess I just assume that. But yeah, you always want to compare, because you can't compare a bank to like a supermarket. I mean, it's just, you can't compare certain
Yeah.
companies.
Netflix has an operating margin of 30-40%, and certain supermarkets have a margin of like 5%, 10%. So if you compare the same sales, it
You
leads to
can't.
different
Yeah.
different earnings. So, but definitely, yeah, I think for pricing, definitely, you can see how the sentiment changes, and if it's fairly priced based on that.
Exactly. Yeah. But there's so many ways to do it. There's and the way I do it in my videos, I do simplify it because I want to convey the message. Because if I try to get into the details, then half the people are getting lost and not even following what I'm talking about. But of course, the comment section, we can, or even the live streams, we can get into the details more. Yeah, forward PE is good.
Yeah, I see. Sergio mentioned the company GOMX, and I take a look. I'm looking at the stock price. That's crazy. I'm wondering what happened there.
GOMX. I'm not even. Is that this one? The one that trades in
Yeah,
it,
Swedish crown. Yeah.
Swedish crown. That's um. Yeah, obviously I don't know about this company.
I've never heard of it, but it's like the share price is crazy on there. I can take a look at that quickly, but yeah, it's too niche in a given industry, and then we need to really understand what they're doing. Okay, so competitors. Um,
See, this is
Starlink,
a good.
yes, right?
No satellites. Too focused on
Um,
tech. People. See, this is an example of what I was talking about earlier. The price originally was below 10, and then I guess there was some type of excitement about the stock, and it came up, and now it's trading sideways around that $10 mark for a few years. So in this case, the past could have helped somebody. But that's obviously not always the case. But,
to be honest, Sergio, what I'll do is I'll take a look. If I was you, I would take a look at the investor presentation and see what the plan for them is in the coming period, just to have a bit of a better, kind of a clearer picture of the products and the estimates, because sometimes they provide forward guidance on the revenue and profitability, and that could help. Yeah, save you money. I see. People who haven't been in the market long think tech only goes up and do not have a balanced portfolio, so only go into tech. Yeah, I have nothing to add. I mean, everything goes up until eventually it doesn't. The .com, we had a huge bubble, and it's a clear example that there are. I don't know if I should classify those people as investors that would put money only because a company has .com behind it, because there are plenty of examples of companies that had nothing to do with the internet, changed the name and added .com, and the price skyrocketed for no reason. I mean, imagine if your local restaurant changed the name to being the same and then .com. It's exactly the same restaurant, right? The same store or whatever it may be. So, yeah, I don't think tech is not. There are some similarities today because there are a lot of companies that go up and there's no really fundamental reason behind it. Of course, there are some outliers, like Amazon was in the .com, and it would be the same today. But some of them will go down. We also see that with the electric vehicles market. I mean, Tesla proved to be a successful company in the industry, And then we had Nikola, and we had a lot of other companies that tried to do that. The share price went up, and is it going to be successful? I don't know. I don't think so. But I mean, look at the share price, huh?
If you're a trader, a day trader, or if you're a swing trader, it's okay to try to time these things. I mean, I wouldn't do it, but this is not the type of stock you want to probably hold long term.
Yeah, I mean, with the market cap, I don't think a lot of these EV companies would succeed, and it's kind of a mania that people see what works share price wise, and they go into that. By coincidence, I listened to a podcast today, and it was about history in the financial markets, and there are some interesting bubbles that there were in the past, and the fact that companies appear in industries that are highly priced. Back in the 1800s, I think in the span of 2 years, there were over 500 bicycle companies that went public. Because somebody thought, okay, this is a great product, and it solves a problem, and then within 2 years, 500, I mean public companies that are all about bikes. So it's how many of them left the market? Not well, probably most of them are out of the market within probably like 5 years. There's no demand for that, and not everyone is going to be successful. But the price went up, so
yeah, that's always how it's going to be. Anytime there's a new industry, or anytime there's money to be made, you're going to see a lot of new companies pop up. But
yeah.
Which company is going to be the successful one?
I'm looking at
besides Tesla.
There's Meta mentioned. I'm interested in the products related to Meta, because Facebook as a platform, in my opinion, it's a mature platform. I can't expect the revenue. First of all, they have, in my opinion, almost all of the users that they can on the platform. Like where are they going to acquire new users? The new people that are coming to the social media, I don't think a lot of them have Facebook as their first choice. There's Snapchat, there's TikTok, there's Instagram. A lot of this. Okay, Instagram is kind of related to that, but Facebook as the main platform, in my opinion, reached its peak, and it might just go downhill from there. Second part is the monetization per user is also at a very high level. So from the platform Facebook on its own, yeah, there's not much that we can expect. Instagram a little bit, and this Meta now is the new big thing, but it's still a bit vague. There's a lot of hype into that, which apparently the market is not buying yet, right? So since the announcement, all we saw was a decline. So we have a company with some parts, some presence in the social media that has its peak, and the question is how successful this Meta will be. If it is very successful, then yeah, currently Facebook or Meta would be very, very undervalued. But yeah, it depends on how much money this Meta costs. We mentioned Zillow at the beginning. Zillow destroyed value by trying something new. If Meta does the same, if they take the cash positive part of the business, if they take the cash and put it into Meta, which turns out to be a failure, then you can argue that currently it's even overvalued. So there are a lot of scenarios for the future, and of course, I'd like to get a bit more information about Meta and to see the acceptance and the new products, and because it's a highly competitive industry. At the end, Facebook competes with all the others for the most valuable resource, and that is the time, right? It's an entertainment at the end, right? It's competing with YouTube. It's competing with everything that takes your time. Netflix. So we'll see how that turns out.
Yeah, we don't really talk negatively about Facebook on this channel. I'm joking.
Yeah.
No, I get it. I hear. I have those concerns too, but that's my main stock. And
It can go both ways, right? It really depends
it could.
on the. I'm not saying so. Just to make it clear, every time that I do evaluation, I'm trying to explain how the company makes money. What are the main businesses? In simple terms, the processes. When it comes to the future, there's a lot of uncertainty. So in some cases, that it really depends. It can go both ways. In some, it's quite clear that it's overvalued. Like Zoom, for example, if you take a look at the high, you can't find a justification for it. Like, what are the forecasts that you'll make? There's nothing.
Right.
Yeah, Apple, Amazon, Microsoft. I don't know if they would push Meta out because they're in a bit of a different field. But I have to say that Amazon is looking very interesting now because it's at the same price that it was a few years ago after this decline. But yeah, they're reinvesting a lot. So let's see. Apple is also a cash machine.
Yeah. Every time I think it's overvalued or it's too high market cap, it just keeps going up. So
Yeah. You remember when there was the first $1 trillion company in market cap, and then it's over 2 and 3. So
yeah, no, definitely. I remember as a kid in high school when I was reading the stocks, and I was like, I wonder if there's ever going to be $1 trillion company. I remember Exxon was like 500 million when I was looking at they were the biggest. I remember thinking that. But I think there's going to be a $10 trillion company definitely in our time.
Definitely. I think it's also quite likely. But it's also not only from the market cap perspective. If you think about the net worth of the individuals, you have the richest man now with almost 100, right? I don't know how much. What is currently the richest? Let's see.
Elon, you mean? Or
Probably close
Bezos?
to 100, right? Oh, as of February, 223 billion.
Is Elon?
So yeah, Elon and then Jeff Bezos. So we're looking at individuals' net worth being half of what Exxon was at back then, right? Individual, not
Crazy,
company,
yeah.
but individual. So yeah, of course it's. Yeah, Sergey, I see you say that you like Facebook. I like to buy it. Look, it really depends on the success on Meta. If you're confident that it can deliver and it will be a profitable part, absolutely. I think that you're spot on that.
Right.
Amazon, yeah. Say Amazon New World is start of their Meta play. Could be. But Amazon, even if you take a look at the current business, they're doing quite well, right? The cloud as well. So Amazon is definitely, in my opinion, more value than most of the other ones now they're in the big, let's say, big five.
That hasn't been doing that well the past few years, Amazon.
No, not in the no. But at this level, I mean, if you take it's probably 2 years ago when it was at this level or so. Or 2020, right?
It was under 2000, and yeah. But the past couple of years, it's been not so great. Although it hasn't come down from its pre-COVID highs like everything else, because it's a good company and it's profitable. Although it could come down.
I'm interested in Netflix to see how that will turn out because it's a very capital intensive business. If you think about it, if you have a if you're opening a new hotel, you have to make an investment because people will have to stay there, right? It's a business, it's a physical building. But with Netflix, it's a similar, except you're not welcoming the users in a hotel in a physical location, but in a virtual one. So they have to invest. The problem is that this hotel that they're hosting is there for a while. You have to have new content. So it's like building new places for the users to stay virtually or every single year. So they need to keep pushing that and keep putting money back. I did value, by the way, Netflix back in probably like 6-7 months ago. Now it's at around the price currently where when I valued it.
Yeah,
Basically,
it,
kind of fair
it
valued now.
I did it at the same time, and I'm about where it is.
Yeah, same.
When it was trading at like 500 or something, I valued it around. I think it was like 330. I think it's below where it is trading now. But I did buy it at 380 when it came down.
Mhm.
I bought it. I sold some stock to buy it because I always wanted Netflix, but I missed the run up, and I had a hard time. I wanted to buy it a while ago, a long time ago, and I didn't. I'm sure I wouldn't have kept it for a decade because I did want to buy it in 2010, 11 because I loved getting the discs in the mail, the red envelope.
Yeah.
So I had to pick it up because it's back to where it is in 2000.
I know.
It's lower than pre-COVID.
I'm looking at the valuation I did. I did it in June 2021. It was about $230 a share at that time. I think it was before that. I think it was before the spike. It was in June. I don't know, end of June somewhere.
June. It was
yeah, something. I see 530. So about 530.
500.
So I valued it right before that spike, and I got some messages when it went all the way up to like almost 700, right?
Yeah, because you're an idiot, right? You know what you're doing.
And my valuation was like 380 or something like that, so very, very low. And I mean, I can't explain the short-term movement. It just happens.
There's no way.
And I just couldn't explain it. So they were like, "Yeah, but why is it up?" I don't know. I can't find I can't justify that price. Can't see the market cap making any sense. And now it's down 50%. So short term.
Like someone said, I hear this all the time. Facebook, nobody uses anymore, and it's the company's not like it was. But look at what it in the fourth quarter, which is the most recent quarter, they had their most revenue ever by a good amount too. Not 34 billion of revenue, with 5 billion more than prior quarter, and their cash flow was 18 billion of cash flow, which was, what is that, like 20% more than just the quarter before, and a free cash flow. I mean,
yeah,
I could understand when you say
I meant Facebook as the Facebook part, the platform, not Facebook as a whole company. We have Instagram, we have different parts of it. So if we segregated the different parts, the Facebook part, the platform part, I don't think that one will grow significantly because the revenue per user is very high. The Instagram part definitely can grow, and this Meta is a new part, definitely. So if I take a look at the different segments, I'd say there's some that are mature, and there's some that have the opportunity to grow. And it really depends on how confident you are in the success on these other parts. Maybe I wasn't clear when I mentioned Facebook. I didn't mean the company as a whole, but just that.
No, it's fine to even
segment.
Say that, and I get that all the time. But even the just Facebook, we are talking about the stock Facebook, but if let's just talk about, if you want to just talk about the individual platform, there half the world uses Facebook, and only like 10% of Facebook's users are US US people. They have like so many people in Europe and Asia, and I don't think they think of it like the way Americans do.
I think it's more. It's definitely a social media one that. But I have a nephew, and she's like 13, 14, and I asked her, so what's popular nowadays? Where do you spend your time? Because if you take the global population, that's where on average where the human being is. But if you take a look at where the young people are, That's you'll see more of a trend there, to understand where we'll be in 10 years. And she was more in TikTok and Snap and Instagram. Of course,
Right.
Instagram is still part here, so it
Right.
it brings a part to the Facebook story. But the Facebook part, I rarely see. If I take a look at the postings that are done by younger people, they're less than by older people. And there's value. Look, don't get me wrong. Social medias, if used properly, they add value to the user. By informing or by connecting with others, especially those that, for example, like me, I live in a different country where my parents are, so I communicate via different channels. One of them is Facebook, like in the Messenger.
Mhm.
So there is value that it adds to the users.
Yeah, yeah, but that's that's what investing is about. We have our own views on things, our own opinions, and like I said earlier, I could be wrong and still make money. I could be right and lose money. I could, or you can.
Yeah.
It's because you might be super bullish on a stock because of what the product they, the product they offer, and you're like, this is going to change the world, and that product, it never works out, and they acquire another company, and they just, that company takes off. So you could just get lucky too. I mean,
Sure.
there's so many things, but
No, I agree. I've had also picks that didn't do so well, and the reason I mentioned that is every mistake that is being made, I try to learn from it. What went wrong, and can I prevent this for my next investment? Is this something that I can predict? Is this something that I could have seen somewhere? And sometimes the answer is yes, but sometimes it's no. There are market conditions that you have nothing to do with, you can't predict. Maybe take a look at Russia, right? If you live in Russia and you find a good company, it makes perfect sense, the valuation is great, and then something like this happens. I mean, you can't predict that, right? Or otherwise you should never invest in Russia, right, in the first place. So
yeah, there's
and
no
of
way to
course
predict these things.
there are certain events. Same goes with the pandemic. The same thing happens because at the very beginning, there was a lot of uncertainty of its impact. There was a virus. It started in China. It's still unclear what are the symptoms, what is the effect, what is the impact. Nobody thought that there would be a lockdown for in almost all world for a very long time. Now we're a few years in, and it still has impact. But as things get clearer, you get a bit more information. You can act on those information. And yeah, we saw that a lot of companies were had a huge reaction on that, overreacted.
Yeah,
Yes,
yeah.
there is one that I did a little bit of research, and it looks very nice at this price. But I still need to gather a few more information to summarize my thoughts there.
But okay, I think we need to wrap it up. I gotta finish this video actually. But yeah, I think this was a good stream, everybody. This is the last host I have in the queue because I haven't been asking people to do the stream. So let me know, should I keep getting hosts, co-hosts, or should I do it alone? But I think this turned out well. Sometimes it's not as good. But yeah, but definitely try to sub to Kostadin channel. The link is in the description. He does a really good job, similar to me, how he digs into the financials and explains it really well. Did you want any parting words? Or
no, thanks for having me. It was nice to have a chat, and thanks everyone in the comment section that contributed to this discussion. And I fully agree with Save Your Money Show. I'm not sure what the real name is. When I make a mistake, I consider it payment in how to be a better investor. That way, money is not wasted. Definitely, you should definitely learn from all mistakes, and also from the mistakes of others. That's preferred. Thanks for having me, Scott, and maybe we'll do another one in the coming period.
yeah, Definitely. Okay. See you later, guys. Thanks a lot.